Hey, welcome back everyone to another episode or another edition of Forex Stat Magazine. It's your host, Lewis. Hope everybody's doing well. Today is Monday, December the 17th, 2018. Man, this year is pretty much gone, right? Got about, another week, 2 weeks, whatever in the books, and then it's going to be 2019. So hopefully we'll all be here to see it. If you haven't already made any money this year in the market, man, it still may not be too late for you. So we're going to get in tonight and we're going to look at some possible potential trades to see if there's anything out there that could really kind of help us in this year on a high note. We're also going to look at some previous trades that we've done over the past week or so and just kind of go in and do a little bit of analysis with those. See what went right, what went wrong, and how we can make it better. Before we get into all of that, though, we want to do the disclaimer. And the disclaimer goes a little something like this. Any and all information is given to you by Forex Text Magazine. Should be considered for, I get tongue tied in that. It should be considered to be only to use for educational and entertainment purposes only. Nothing that we give to you or share with you should be considered to be um, actual trading advice or actual financial advice. If you're in search or in need of financial advice or trading advice, then our suggestion to you would be to seek out the assistance of a licensed financial advisor. So let's go ahead and get right on into this and get you to where you want to go, which is looking at some trades. So first one we have here on the screen, this right looks a little busy, and I apologize. It looks a little busy, and the reason being is just because we're looking at the Great Britain pound, the Zillion dollar, and we got a couple things going on here. You see the support and resistance lines are on the screen, right? You see a downward trend line is on the screen as well, and then you also see these other little numbers right here, which are Fibonacci sequence. So you got about 3 or 4 things that's going on. Now, we're kind of quiet at noise. Just kind of take everything off for a second, and let's just look at what we got here. Right. And the reason why I put the support and resistance on the screen is, once again, we kind of want to know where we at in relations to the trade itself. Right. We at a support area where buyers tend to come in, or we at a resistance area where sellers tend to sell off. Right. Always got to know that, because we like to know that, because when we're trading, don't want to be buying at resistance and don't want to be selling at support unless there's a very, very good reason. We want to actually be able to buy at support and sell at resistance, right? The other thing we're looking at is trend line. Is this thing on the sell side of a trend line, or is it on the buy side of a trend line? If it's on the sell side of the trend line, then we definitely want to be selling. So that makes seeing when we're at resistance even more important, right? Support and resistance even more important, because we definitely want to be selling at a resistance spot if we're in on the sell side of a trend line. And if we're on the buy side of a trend line, then we want to be looking for support, because then we want to be looking at opportunities to potentially buy in this market. And then also, too, we want to be looking for U-turns in the market always, right? And then another thing, reason why we look at our Fibonacci sequence is because that helps us identify potentially our entry points, and then also our exit points, right? So when we're looking for points of entry to actually get into the market, looking for points of exit to get out and take our profit, and also exits to just get out of the market because, hey, you know what? Maybe we got in a little too early, or maybe we just, I don't know, our analysis was wrong, and we want to make sure we get out, or maybe the market just makes an unexpected move, and we want to be out of it. If that occurs, we want to make sure we have areas that's already predefined, saying that, hey, this is where we get out. So with all that being said, this is essentially what you're seeing here on the market, right? These are our support and resistance lines. The trend line, so the trend line says that we're on our sell side right now. Support and resistance line is saying that we just bounced off of a support line, right? So that would have, been a place to buy at. But once again, because we're on the sell side of things, we're not necessarily looking for buy entries, right? We actually went through this trend line that's held up for a while, and you can see right here where it started. It held up here, boom, and this right here was at a resistance, support / resistance area, right? And boom, price went down, came back up off of this support line, went back up to this support slash resistance, and then this trend line here, and on the sell side, and then went back down again. Came back up, hit the trend line on the sell side, and went back down again. And on this last instance here, it's come back up. It's actually prices that actually managed to go through this trend line, the sell side trend line, right? And now it's on the back side, which may make us believe that this right here is actually may become a buying opportunity for this particular pair, right? And remember what I told you before in previous sessions is that typically around the first of the year, price tends to start its new trend for the year, for at least for that first part of the year, right? And so it may continue on a particular trend for at least like the first 3 or 4 months before it, U-turns and goes back in the opposite direction for that, for the next couple of months during the year. So this maybe what we're seeing right now is the bottoming out of the Great Britain pound, New Zealand dollar in this particular case here. A lot of that may have to do with the fact that, the information that came out from China is that there may be a particular slowdown in that currency, while there is also some more positive expectations can be coming out of this whole Brexit deal. So with that being said, that could be the reason why we're starting to see this formation here, but it's something we're going to have to watch over the next couple of days and a couple of weeks, because we're also getting to get into a particular time right now in the moment where the trading sessions are going to be a little bit more trickier, because there's not going to be a lot of traders out there. There's not going to be a lot of money floating out there, just because we're going to go into a major holiday, a world holiday, over the next week or so. And so that's going to provide a lot of volatility in the market, not just in American markets or in your local stock markets, but just also in the currency pair too as well. Even though this right here is something that's has a ton of money into it, it can still get very volatile around these holiday times. So just be aware of that, and also be aware of the fact that you see here prices formed outside this downside trend line. The expectations would be this: if this is a move and U-turn, that price will break through, price will pull back, and then price will begin to move back up, right? Essentially creating an ABCD pattern, right? Which is be your A, this will be your C, me your B, and then your C comes down to some point, and then you look for your D extension, right? Same thing with these fibs right here, right? You got your A, you got your B, you got your C, comes all the way out to your D, right? And then you got your A, or you got your A, you got your B, you got your C. It's supposed to extend all the way out to the D, but unfortunately, doesn't look like it made this completion this time, because it looks like price right now is on the buy side of things, and if that's the case, and if this maintains, then look for price to be U-turning. Now, here's the other thing: price could go back through this downside this downside trend line, and then continue to make its way down to this fib extension. And if it does close back below this trend line, then yeah, I would expect then to make its way back down to this D extension. But right now you're kind of in the holding pattern, because until we figure out what's going to happen here over the next 24 to 48, I won't get into this pair. I just let it sit on the sideline and trade it, until we get some type of further confirmation, some type of better, clearer picture of what's going on. Let's look at the Great Britain pound, Canadian dollar, and this right here, I just kind of playing around a little bit on this right here. Now, I will say this right, last week I did have a trade on here, and the trade was actually a buy, and I had my stop loss down here, and then I have my take profit up here at this resistance line. And as you can see, you don't see any movement on the chart, you don't see any lines on the chart, and the reason being is because that particular trade did get capped out. We got stopped out. My stop loss was, it was somewhere in here, a little bit here, yeah. And so price did come down and hit my stop loss, and then of course it's come back up. Duh, that's the way it happens. But it's okay though. It's a sideways moving target right now. Um, and that particular trade was just really kind of placed based off of the fact that boom, that we had already been hanging out around this sorry guys, drawing a blank here. The support area, right? And that should lead, or that should, um, indicate that because it's hanging out around the support area, that it should be reversing at some point in time, heading back up towards uh, this resistance line. And still believe that could be the case, but unfortunately for right now, for us, it did retrace and it held up a couple of times, the support line. But unfortunately on Friday, I think with the sell-off in the market that we had in the American market, it was just a little bit too much weighed in, and that's what caused us to drop the way we did. After that rush out of the equities the way it was, that and then some other things I think kind of weighed down on it. But I think that definitely had some to do with what occurred. And it happens. Sometimes your pair is going to get influenced um, by other outside market activities. It's not even necessarily directly correlated with what the pair that you're trading. The ideal though is, if you minimize your losses, you're able to get back in there and to reestablish your position and to make the money that you were originally anticipating of being able to make. Now with this particular pair here, there is opportunity to get back in here, but right now at the moment, I don't know that I would particularly want to trade this one right here. And I'm going to tell you the reason why. This is one of those 50-50 trades, like where you could go, half of me say do it, other half of me say, I don't know. But here's the reason why. Is because if you look right here, you're definitely at a level of support, right? The only thing is, though, if you're looking at some of the other currency pairs, which we'll get more into this as we go through this this little session, it looks like that there may be some downward momentum on the Great Britain pound, and if this overall movement is down, then to kind of get in and try and buy might be a little hard. You follow what I'm saying? So if the overall momentum, overall pressure is down on the Great Britain pound pairs, to come in and try to position yourself to buy and to expect for it to go up might be asking a little bit much from this particular pair, right? Now, not saying there's not some opportunities there, right? But I would say that if you're going to trade this pair, especially at this point in time now, you want to have a level of clarity as far as what you're seeing in the market, and there shouldn't be anything confusing. Now, you say, well, how do I get level of clarity in the market? I'm glad you asked that. It's a great question. One of the things that you can do, right? Now, don't get me wrong. I mean, it's right if you look at this, right? It's been going down, it's going up, down, but it's a long wick up, down, you got a wick up. That tells me that this buyer is coming back into the market. One of the things that you may want to do is you may want to look at your time frames for trading and see if you can find a time frame where you're getting like an ABCD pattern on that pair. And if you can find an ABCD pattern that's forming on that pair, then that makes it easier to trade that pair. Unfortunately, right now, I can't really see anything. I mean, this right here is an ABCD pattern. This right here is going down. I don't really have one that's going up just yet. This right here may be it forming, right? Um, but we won't know just yet. Let's see if this is it for me here. Yeah, that's good. And so guys, if you don't know what I'm talking about as far as the ABCD pattern forming, once again, it goes into the whole Fibonacci sequence. Go back and look at some of the earlier tapes. Go back, go to our website, look up Fibonacci. Go to our YouTube page, look up some of our stuff about technical trading, technical analysis, so that way you get more familiarized with it. But this right here, off this 4-hour chart, looks to be it potentially for us. Here goes the A, here goes the B, here goes the C, all right? And then here goes the D extension right there. So that means that if you bought in here, then you'd be looking to place your stop loss probably right about here, with anticipation of taking your profit over here. Now, will this work 100% of the time? Absolutely not. Everything has the potential to be off. That's 210 pips. And you're risking... Alright, so you're risking 81 pips to get 210 pips. That's not a bad risk to reward ratio, right? So this is what I mean about going in and finding that, because what you don't want to do is you don't want to do, whenever possible, a one-on-one ratio, and you definitely don't want to do something where you're risking way more than what you have the opportunity to make. And in some of these other formations, or some of these other charts, looking at it, you'd be doing just that, or you really didn't have like an ABC pattern, so there's not really a way to kind of tell where to get in and where your exit would be at. The hope would be, okay, of course, it'd be someplace up here by the support resistance area, but there's just no guarantee that that's where it was going to be at. The whole point or the whole purpose of using the Fibonacci is to be able to get in there and help you gain a clear picture. And actually, hold on a second. Here you go, right here. Boom, boom, boom. It actually, that's that same one, but it's superimposed over the 1-hour chart, so it kind of shows you where it is based off the 1-hour chart, even though it was off of a 2-hour chart. And so we get the same basic pattern here, which is this right here would be the swing low, and then we're looking for our D, which is up here. So this would be our C here, and this would be our D up here. So once again, whenever you can find those patterns, just a little bit more spread out. So this right here might have been a little bit more harder to see because it was on an hour chart, right? And I've probably been looking a little bit, probably been looking a little bit over here trying to find it, or a little bit over here trying to find it, right? Instead of way back over here. But when you look at it on a different time frame, right? Sometimes it's a little bit easier to spot these things, and then for you to be able to go in and get your opportunities. Okay, so just kind of keep that in mind. So what we're going to do, just for once again, educational and entertainment purposes, right? We're going to get in here tonight. We're going to put on a trade. We're going to make this our stop loss. We're going to make this, up here. Probably put it right about here. Our entry buy. And then we're going to be looking to take our profit right around in here, right? So that's a good one to look at. And remember, you can do this on different time frames, so don't worry about that. Hold on one second here. So that's going to be pretty simple there. Let's roll back over. And just remember that the same thing that we just used, the same technique as far as going in and looking at different time frames, you can do this on any currency pair. So if you're in a trade, or you're looking to get into a trade, and you really can't seem to, like, maybe you used to trade off the daily charts, or you trade off the hourly charts or whatever, and you can't really seem to find what you're looking for, entry, switch up your time frame, right? Switch up your time frame. Use your fibs, right? And look for your ABCD patterns, because they're out there, but you just got to find out what time frame that they're on. Um, and so it's simple, so it's easier for you to see. It just makes it easier for you to see. Here was another one, right? Boom, boom, boom. So A, B, oops. A, B, C goes back to blue, right? Boom, back to the blue. Boom, we're in. Boom, boom. Just kind of showing you how these ABCD patterns just keep going throughout a chart, and it's once you get used to going in and spotting them and finding them and just putting them out there, man, it's pretty freaking amazing. Right, this goes back to the red, so it lets me know it goes to the red, right? And boom, what happens? Price goes all the way down here, it hits the red, boom. And so now you're ready to get back and make another pattern. It's gonna be a kind of a wide pattern here. So that may be one you want to try to look at and see. Also, this could be so that means the next red is coming down to here. So could this be what's going to happen next? I don't know. But that's something we want to look at, right? Definitely a low that it's been to before. If it gets to it, yeah. And it's definitely boom, 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 boom. Still have been making lower lows. So definitely been making lower lows and lower highs over time. So definitely on a downward trending trajectory. All right. Definitely on a downward trending trajectory. Making lower lows, lower highs. So is there a possibility this thing is going to continue low all the way down to this point? Absolutely, there's a possibility. And that correlates perfectly with a previous resistance, right? Previous support. So could that be a area of target? Yeah, absolutely, it could be. Question, of course, would be, well, how far off is it from where you're currently at right now? 467 pips. So definitely. Now, before you get overexcited and start chomping at the bit and just dumping all your next paycheck into it, a couple things probably would do is one, a couple things I would do probably one would be to just see how it plays out over the next couple of days, right? So once again, we're at the end of the year, right? I probably want some type of confirmation. Confirmation for me would be maybe just maybe price dropping below this low here, right? Make a new lower low, or even seeing the price pushes up and then pushes off of this this trend line here. So either one of those things would be pretty good for me. If you're feeling antsy and whatever you want to get in there, you could, right? And then probably put your stop loss back up here somewhere. Once again, this is one of those trades that's probably a better setup out there. And you should always be looking for your better setups and not just looking for a setup when you're going out there to trade. right? But here's a potential, right? There's definitely a potential. It's definitely a possibility, um, for this particular pair, right? And that's up the daily chart. You could also look for similar patterns, similar formations somewhere, um, it's a little bit easier to trade on the hourly charts or 15, 20, whatever minute charts. You just got to play around with it a little bit. Okay? And see where it's at. See where the patterns are at. See where they're at. Let's see here. Remember, A, B, C, D. That's it. A, B, C, D. That's what we're looking for. A, B, C, D. And this is what I mean about the pullback. So if I'm looking at this right here, if I'm being honest with myself, it looks like there may be some room for this thing to pull back. And if you notice right here, where's the pullback going to go? It's going to bring it right up to that trend line. All right. And then that's what I'm thinking is that once it comes up to this trend line here, right, that's when you're going to have, right, so this would be the completion, right? So this is the A, this is the B, this is the C. Let's come back up to this trend line, D, right? And then what happens is it's probably not going to close above the trend line. You probably get a long candlestick wick and it close under the trend line, right? But then that's going to give you the signal that, hey, this price is reversing and we're going to go back to, oops, that's not it, oops. And we're going to go back to that original D. So let's look at this. This is off the 4-hour chart, 4-hour candlestick, boom, boom, boom. So you see what I'm saying here, folks? So price is going down, right? Price comes back up. Now, once again, price has a couple things that it could do. It still could continue to go down, right, and go down to this level here, support, into this D, right? In my opinion, though, I think price may flirt with going up towards this C here. This is the C, but this right could be the C here, right? And if it flirts with coming up to this C, then going back down towards the D. That's just my own personal opinion that it could. Not saying that it will, but it's the potential it could. There's also here, what you see, which is a bearish engulfing candlestick, right? So that gives a little bit of pause too to say that this right here may actually be the C, right? Whenever you see like, and this is where understanding candlestick formations and chart and patterns and stuff is very important, especially when you're looking at those U-turns in the market, looking to try to find that C in the market. When you see these type candlestick patterns, usually they can be an indication that you hit that C. So to trade this right here, just kind of go back in and try to eliminate some confusion and get some clarity here. To trade this right here, first thing I would do is trade based off of where we're at right now, right? I would say this right here would be the C, right? Park my stop loss somewhere up here beyond there, right? Look for my D at this lower level. Now, with that being said, if price for whatever reason retraces through there and breaks through that stop loss, then I'll be looking at what will be my second point of entry. Second point of entry would be waiting for a price to come back to this D extension here based off of, that 4-hour chart, right? Wait for it to hit that D extension there, and then once it completes it, wait for price to then move back towards that still D extension on here on the daily chart. And once again, if you have any time, you're having a hard time understanding this, none of this seems to make sense. Go back and look at some of our earlier videos. Go back and look at our website. Go back and look at our YouTube channel to get up to speed on it, so that way you understand what we're talking about. So that way you'll be more knowledgeable going into this trade. Over the next couple of weeks, Going into 2019, we plan to get a lot more technical, just a lot more sophisticated in our trading methods. And in order for you to be able to keep up, if you hadn't been a day one person that came in on day one and kind of followed us through, it's going to be a little bit harder, but you can follow if you go and get yourself up to speed. Look at some of our earlier videos on YouTube channel. Go look at materials on the site, and then very important, go sign up for this Smart Trader software. Go register for it. You can register with our link over in the on our Twitch channel. So you can get familiar with the software that we're using, and then that way it makes it a little bit easier for you to place trades as well. One of the things that we love to use here is our Smart Fib tool, which essentially allows you to be able to place Fibonacci's on the charts. Just find you a low and then click it, and boom, you automatically place it for you. I just like to go in and draw myself, just basically finding my own lows and going in and drawing myself. That's just because I'm old school like that, been doing it for years, but I do love the fact that they have that smart tool on there, because it makes it easier for somebody who's a beginner to just find the beginning of the trend and then just, hit that smart tool, and it automatically just, fills in the blank for you, okay? A little bit of disclaimer here. We are an affiliate of the Smart Trader software company. And so if you do decide to use it and you actually take the paid version of it, then we will get compensated. It's a little small, so we get compensated for it, but still it's money nonetheless. And I like to have that. I like to let you know that up front, so that way that's how we get compensated. That's one of the ways we get compensated, and that helps us to be able, just like I said, to be able to keep giving this information for free. Because the way we generate a little bit of income, and not necessarily feel like we have to charge you for everything that we give you. Okay. So let's see here. So yeah, the play would be, once again, go ahead, short it down, and if the short doesn't hold, just get ready for a price to come back up, retrace, and then go in and reshort it. Right. Either way, I don't think you'd go wrong with it. I think it's a good probability trade here. What I would do in any of these instances, though, I would not leverage a lot. I'd probably keep it at the standard lot, which is $10 a pip, until you get something that is a very high probability trade. Keep it at a minimum. And so that way you don't have to worry about losses overtaking you, okay? Because losses can add up really quick. All right, so here goes another one. This right here, once again, is the Great Britain Pound Aussie Dollar, and you see the downtrend is in place, and then you also see that we have the price that has managed to cross over the downtrend. Looks like it's pulling back somewhat here, possibly. And then the question becomes, well, if it pulls back, will it keep going up, right? And here's something to pay particular close attention to this particular pair. If you notice the support line here at the bottom, price has pretty much touched it twice, right? So that could be what we call a double bottom, right? Now price is making its way back up towards this trend line. Making its way back up to this resistance line, right? So the expectations here would be, of course, to see price pull back some and then position itself to go back up. Ideally, that's what it looks like it may do. And the reason so, especially against the Aussie dollar, just because, once again, there's been a lot of weakness coming out of China as far as with the markets, and it looks like they're probably headed to a recession, if not a depression. And with that being said, especially with the trade wars and everything that's happening, I think the reason in the Aussie, Australian dollar being a big trading partner for China, if China slows down, then effectively it's going to cause the economy of Australia to slow down as well, therefore putting that negative spin on that particular currency pair. So that may cause them to have to go in and kind of soften their position as far as with interest rates, to try to get some liquidity going into the market, to get some, some the economy, keep the economy stimulated, to keep it moving. So kind of expect that weakness, and I think that's what the market is expecting, that weakness too. And so that's the reason why you're seeing a little bit of a pullback. You're seeing that double bottom take place. And so the expectation here is that this particular currency pair does have potential room to run. You got to be careful with this though, because you don't want to get caught up in something and then, that not be the case. So once again, like with everything else, I always say, trade with your stop losses in place, right? This particular pair looks like it comes back all the way down to the green. So that means that even if this thing does run, I'd be looking at a take profit right about here. All right, so it's not anything like phenomenal, but gives you an idea. Does 266 pips profit, and we're looking at risking about how much? 270. So this is one that you probably won't want to be in, because you're risking 272 pips to get 266 pips. So it doesn't make sense to even trade this one right here. So this one right here is definitely one to sit on the sidelines, like, I don't want to mess with it. All right. If it pans out, it pans out. If it doesn't, it doesn't. But once again, you don't want to be in a trade where you're risking more than what you're going to potentially gain, right? So that'll be one we set out on. Next one, US dollar. This is the one that I was looking at because of this pattern we formed in the past, where once it crosses over that trend line, it typically pushes up pretty strong. I was coming back, approaching this, and unfortunately, just wasn't able to hit it as of yet. We'll see though how this plays out over the next couple of days. As you can see here, price did complete that Fibonacci sequence, so that means that price could, potentially, start that U-turn, or it could, continue the momentum downward and just start a new sequence in place. It's below support right now, and the support has turned into resistance. So, and it's still following the trend line down. The only way to get confirmation this thing is going to be moving up, it's going to have to cross over this trend line. Like I said, potentially pull back, and then proceed up. And when I say pull back, it doesn't mean it has to have like a deep pullback where it retouches the line again. It can just go through, right? Have a small wick or a small candle where it pulls back for a day, to kind of like take a breather from, all the energy it took to push through it, and then just go ahead and continue to push up. So, but anyway, we'll see. So that's it for me for tonight, folks. Looks like once again we got out of here pretty early. It's 3:39, so it's not too bad, right? We got a couple of potential little trades out there that we can look at and play around with here, and that's what I think we're gonna do. And we're gonna get out of here. I will get back with you tomorrow morning in about another 24 hours or so. So that way we can look back and see if we were spot on with our analysis or if we were way off, which I think we'd be spot on. I'm not too worried about that. I think it's pretty good analysis. And I think in both parts, what we're going to do, I think we're going to go ahead and push into the buy, right, off these 4-hour charts, whatever. And then look to go back and reposition ourselves to sell here shortly. So anyway, that's what we're going to do. And I will see you guys in another 24. God bless you. Take care of yourselves. Take care of each other. And I will see you on the next go.